Hey everybody, welcome to another weekly edition of our weekly roundup. This is brought to you free by our trader user group. My name's Preston Brent, and this is for the weekly roundup through April 17th, 2015. What I've got on the screen here is the E-mini S&P 500 futures. Well, it'd be helpful if I got it up there, wouldn't it? Okay, what I've got up here are the futures for the S&P 500, the E-mini contracts. The last week was going along fairly okay until Friday, and then we had a pretty good little pullback. You can see on the S&P 500 futures, you know, if I zoom in here, you can see this red line where we pretty much took it out. That red line is the 50 EMA. And, you know, it kind of is a line in the sand for a lot of traders. You can see right there. We actually went below it. And then we came back up and closed the day when they finally closed the market. It's just sitting at 2075.50 or 76.25 for the S&P 500 futures. So on an intraday basis, that was good that we were able to hold the 50 EMA. This line right here was the opening price of the E-mini futures contracts for the year 2015, and we're not that far above it. This red line up here is the intraday high for the E-mini futures contract, and you can't see it, but just down below the screen, I'll adjust it for you so that you can see here. But down below is the low for the year for the E-mini contracts right here at 1970.25. So this is the range that we've been in. Now, if I back out a little bit, let's just take it out. This is the daily chart, so I'll just kind of condense it a little bit, bring it together. You can see how we've honored this channel, you know, going all the way back to 2012, Q4 2012, and it's been a fairly tight channel. Last October, you know, we did fall out of it briefly. We had a spike in volatility, but we quickly got back in. But ever since this spike right here in October, we've had a hard time staying within the confines of this upsloping channel. In fact, you know, right as we kicked off Q4 of last year and then a final push into the end of the year of last year, we've pretty much been outside of this channel. And now we're in this tight range right here. If I draw this box, you can see this is the range that we're in. And until we break out of this range, it's just going to be choppy, and that's all it is. Now, all of this chop right here, back here in 2012, right, in 2012, we've had steady progressions. You can see the upsloping vector. We've had no problems in making new highs, okay? And very rarely did we have a prior major pivot low broken. Just a few times, but even then we were within the channel. I could count them on one hand, or maybe just once, really. So we've been making higher highs, higher lows. But then once we got into that giant pullback here in Q4 of 2014, ever since then, we had a quick thrust up. We made a new pivot high from that pivot high here, but then we've just had trouble. A lot of trouble in River City, as they always say. So, you know, let me just stretch it back out again, and let's get back to a little bit more of a normalized view. And as you can see here, and I move it back up like this right here is what many would call a topping action. You can see this huge downward thrust here. And we have been making higher pivot lows like this, and in fact these pivot lows right here have held up fairly nicely, and these pivot lows are higher pivot lows, and we made a higher high until right there at the 2117.75, and now we just cannot penetrate it again. So if we can't make higher highs, we're making a lower pivot high here. We did not get back up to that prior pivot right at that point there. Now, we're in this range right here is where we're sitting right now. We're going to break, and anybody that tells you they know the direction of the break is fooling themselves, and they're fooling you. You can see from this pivot high here to this pivot high here, we had bearish divergence, and we almost I would have liked to seen us gone up, taking that high out there, because I would have added a lot of shorts, because you can see the strength in this up move is very low, getting back up to here. And had it gone up here, we wouldn't have gotten much higher than that, which would have given us continued bearish divergence, which is why I'm saying that we're in this range here, but it seems like a topping action to me, which would indicate to me that we would come down and hit each of these support levels that I have on the screen, and then a shaded area here, and then taking this out and testing 1970.25. I do believe we need to come down, quite frankly, and test this prior pivot low made back in October. Now that's a pretty good fall, right? I mean, right now the E-minis are at 20, let's just call it 2076. And this pivot low down here was right around 1820, okay? And that tells us that that is about a 200, roughly, let's call it a 256 point downward move from the current price right there. So if we took 256 and divided it by our current price, you know, we're looking at about a 12% pullback. And remember, we had one 10%, almost to the T, pullback right here. That was 10%. Now we've gained a little bit more elevation, you know, from this point here to this point right here. So we've gained that elevation right over here. So I think this would be a solid support point for us should the glue come off the horse there and out of the factory. That would be my severe pullback, 12%. I think a lesser pullback seems to be kind of in order right now, only because the Feds here in the U.S. and Draghi in the ECB and others, Britain, China, Japan, have just got so much money in the markets that it's kind of an artificial market to some extent, okay? And so that keeps any downward pressure, money's just going to flow into the equity market. So what would be a more realistic pullback? If we do get more weakness, I feel confident that if we see more weakness, we'll probably come right back down, test the opening price, and then come down and test this area right here, which is sitting at roughly 2032. Let's just call it 2032. So going into next week, 2032 is my key pivot area for the week. Now, we had a couple of key news events come out on Friday. I mean, you know, the week wasn't going that bad. We were towards highs for the week on Thursday. And then we got news on Friday that the Greeks are having more problems and they're going to be a put up or shut up moment here next week. And then coming into another week towards the end of April, they've really got to react or they're out of this just going to cause major panic globally. Even though they're such a small element of the ECB and the euro, there's a contagion effect. So I'm curious to see how that's going to play itself out. Also, we got China that after the Shanghai markets closed Friday, they came out and announced that they're going to restrict margin use, allow short selling, and FXI sold off big time on Friday. Now, for those of you members, you know, I told you I thought a short in FXI made sense with puts because it's just too elevated. So being the contrarian that I am, I took shorts in that, and I went long UVXY on the volatility side. So this Friday was not a bad day, really, if you had it played right. But we were looking for a little bit of weakness and a pullback, and that's what we got. Now, if we go on and just kind of carry it out a little bit more, and let's just get the chart back up here again. So you can see we're sitting just above the 50 EMA. Now, if we look at the and I apologize, my screen keeps going blue and white and back, but eSignal does not play very well with WebEx. But if we look at the Russell, the Russell is a different story. The Russell made and came out with all-time highs this past week. So the Russell is doing a lot better. And even on an intraday basis, it's still well above the 50 EMA. And our members know that we favor small cap and mid cap in 2015 because the strong dollar is better for those guys than large companies, because large companies have more currency risk. In fact, we're seeing that in the earnings season. Now the earnings are coming out. They've already been revised lower 3 or 4 or 5 times. So companies are starting to come in, and finance isn't doing that well. Banking kind of had a week last week. We had a lot of bankers come out. It's kind of a mixed story. But we're going to get some more technology companies coming out in the next week or so. Netflix was the lone exception last week that just blew the doors off and just really went outside the expectations of the market, and it is up about 70, 75 points. But that wasn't enough to keep the rest of the market strong. The market sold off. So, but you can see here, small cap and mid cap, I do like. If we look at the Dow futures, you can see now the Dow futures, this one, it is not only underneath the 50 EMA, but the Dow futures are sitting a tick or two below the opening price of 2015. The Dow opened the year at 17,781, the Dow futures, and we're now sitting at 17,774. So we're at 7 points, 7 ticks lower in the Dow futures from the opening price. So the Dow's in the red for the year. And if we look at Nasdaq, the Nasdaq 100 futures had a really bad, awful day on Friday as well. Everybody kind of recovered a little bit into close. You can see the Nasdaq futures are sitting about a point below the 50 EMA, but they're still above the 2015 opening price. So it's going to be very interesting to see, you know, how the markets react to Greece and how the markets react to China's decision to tighten this thing up. And speaking of China, I wanted to show you the FXI, which is an ETF that tracks China. You can see here, it was to the moon right here. I mean, it's just the movement in FXI was just really unsustainable. This is a daily chart, and you can just see it was like a rocket ship. And right in this area here, I kind of sent a note out to our members that, you know, picking up puts in FXI makes sense. We went out to June. I wanted to give it time to work because, quite frankly, this could have gone up to here, but then eventually it fell, and you can see it. You know, it's sitting here right now. I do believe we're going to come back and test that area over the next month or two. We may even come down and fill that gap sitting here right around 46.50. I'm going to be real curious to see how this is going to play itself out. It may sucker some people in by moving up and then roll it over like that. But, you know, picking up puts in FXI was, to me, a fairly simple, easy trade to do, and just watching it kind of manifest itself, okay? So that's kind of where we were sitting there. So now if I come back, and let's get the chart back up here for you guys. If I come back over and we look at volatility, the VIX actually hit 15 intraday on Friday, and then it kind of sold off as we went through the day. You can see that candle right there, but it's still susceptible, folks, for more spike, more upward movement. You can see here we kind of tested this low right here, and we got that bullish divergence. We call it a bud, and these things are fun to trade because it means, and you don't know when, but it tends to mean that we're going to come back up and challenge this downsloping angle right here, which put us back up over 15 or 16. So that's kind of, you know, what we've got at stake here. So next week is going to be a very interesting week to just kind of see. Now the interest, what we need to watch where the market is going to close. What can happen on these kind of days is that the market, you know, can open up and then all of a sudden roll back over. We want to watch and see where it goes, you know, as we go into close here. If we look at the euro, and let me get the screen back up for you. if we look at the euro is having a little bit of a bounce, a small one. Don't get lulled into saying, okay, now I'm going to be bullish the euro because we've had a week where it's kind of moved up a little bit. You know, we're going to stay in this. Currencies, when they move up and down, they stay in a range-bound area, and then they break out. And they, you know, this just kind of, the breakout was right here for this one, right? So that one should probably be there. So let me, if I were to adjust this, let's just get it more accurate on the screen here. Let's get this back up. Oh goodness. All right. So if I were to get this a little bit more accurate, this would probably be like this right there. And then I would put another one on like this. So you can just see here how we're sitting, just like, let's get that out of here and let's raise it up just a little bit. So this is how the currencies tend to move. So we'll move for a while, we'll find a support area, and then we'll move for a while and we'll find a support area. So this is kind of where we're sitting here. Now, you can just eyeball this, and you can see, well, let's get this off the screen. I'm having trouble with my pen this morning. You can see the width of this is a lot steeper from peak to trough than it is the width here, okay? The further down we go, the more volatile it's going to get. So it's not surprising to have one of these kind of wider consolidation zones. We've got a little bit of a bullish divergence going on when we hit that and that right there, actually a very steep one. So that would suggest we're going to come back up here near term. Don't get lulled into the fact that we're going to come all the way back up here. The odds clearly do not favor it. Now, it can happen because anything can happen in the markets, but the charts seem to indicate that's not what's going to happen. It seems to indicate we'll probably come up here. You can see this red line's a 50 EMA. We'll probably have some kind of tug-of-war in this area and then come back down, and we're going to be in this choppy range here. A way to trade this may be, if you can trade futures on the currencies, come up here and maybe sell in a strangle, doing a short, I'm sorry, not a call up here and a short put down here. So you just bracket this, and in the futures markets you can get you can get some pretty good premium in this. If you want to trade the ETF, then FXE would be the way to go. All right. So that's kind of where I'm sitting right now on the euro. The dollar is just the opposite. These two kind of go in the opposite direction. So that's kind of how we're sitting on both of these. If we look at silver, those of you that have been following me, especially our members, know longer term I'm bullish silver. We're in this kind of move right here. This pattern seems to indicate it's going to be a 3-leg, a 4-leg, and a possible 5-leg, at least near term. But it's going to be choppy. I've been shorting puts underneath SLV, which is the ETF that tracks silver, just to get a sign to take some out. Silver can go a little bit lower, but I want to pick it up because I do believe in the next 2 or 3 years, silver is going to be probably in the mid-20s, somewhere in that area there. And off of a low base of 16.2 right now, that's a pretty good return for a part of your portfolio. So it's just a fun trade. It's not a day trade unless you want to get into the futures market, but it's a good trade longer term. Energy, oil has had a really interesting week. We've had a lot of news hit the wires on oil, and you can see oil finally had a breakout here. A breakout. We were in this range, and it broke out. So this tells me, and I've told members that oil will see $40 a barrel before it sees 60, unless one thing happens. If we can break out of this area here and hold it, which we have, we're going to see 60 again before we see 40. So this does not mean we're not going to get a little bit of a pullback. I think we will. If we pull back and stay back in this zone again, that could be likely too. But I do believe we've got a lot of forces acting on oil right now, even though we're in season, to drive oil down or keep it down. But I think we've come close to finding a bottom with that bullish divergence in this lower low here. But I believe we're going to be pretty much in one of these kind of crazy modes. We may even be in a mode where we're up and then we're down, we're up and we're down, up, down, kind of like this in a move up to the 60 area and then a longer consolidation period. All right, so oil could be in one of these kind of plays like this. Now, of course, depending on the deal that the U.S. and Iran work out and the other countries, this could affect this curve, whether they're going to be putting more supply in the market or not. So we've got to watch it very closely. So that's a little bit about oil. Now, I could go into some of the others as well. Gasoline would be one where we're playing gasoline futures. We're bullish gasoline futures. When we were up here and we were pulling back, I said, okay, if the 50 EMA can hold, then I'll kind of disregard that. It held there. We pulled up. We tested it again. We went up. We tested it for 3 more days and we moved up. So I see the 50 EMA as a really good test. This is going to be a hard pivot to take out 1.97, and then the psychological barrier of 2.0. But we're going into full driving season, and you know, this movement up even was with inventory reports showing an increase in supply, just not as big of an increase as before. So the minute that supply is reduced, you're going to see this thing go through the roof. So I do believe that we've got a little bit of more upward movement up here, and then it's going to fall back down. So near term, I am bullish. I'm bullish gasoline. So that's kind of where we're sitting here on the gas play. All right, folks, that was a real quick update. I wanted to give this to you. We've got a lot of great things going on in our group right now. We're doing a webinar series on trade adjustments. We're going into part 7 this coming Thursday. If you haven't even attended any or participated, highly recommend you jump in. All of these things are archived, so you can pick it right up in part 7 and go back and look at the others. We've also got a number of things going on with our membership, and we've started our secret traders, so we're off to that one. We're going to be starting another portfolio of 100,000 plus. I'm going to be trading that one for everybody. So come on and check us out. Otherwise, have a really great weekend. Enjoy the warm weather in the Western Hemisphere and the Northern Hemisphere. For those of you members in the Australian or Latin American markets, your winter is getting ready to come up. So hopefully it won't be as bad as the one we had here out of New York. All right, everybody, have a great weekend, and I will see you later. Bye now.